Well, good morning, ladies and gentlemen, and thank you very much to Paydirt for giving me the opportunity again to present this year at the conference. A special thanks to Bill, Dom, and their team for putting this conference together for us. So what I would like to do today is take you through the value proposition, which is Atlantic Lithium. In particular, I want to focus on 4 key aspects of our business. Firstly, give you a quick corporate snapshot of who we are as a holding entity. Talk a little bit about our project in Ghana, talk about our partners, and particularly how those partners are helping us funding the project to commissioning. And then lastly, just touch on a couple of aspects from a growth perspective that you need to look out for over the next 12 months. So first of all, we've got approximately 650 million shares outstanding. We've got a market cap of 250 million Aussie dollars. We listed here in Australia on the ASX and a dual listing in London on the A market as well. Notably, our register is very tightly held with the top 20 shareholders holding almost 67% of the outstanding shares. Very notably, one of our major shareholders holds 27.6%, SAW International, who is a South African mining house. They operate multiple assets in Africa and also a conversion facility in Malaysia. So a very good partner to have. They also made an offer on the company approximately 6 months ago in sterling terms. That was for 33 pence. At the time, that was about a 50% premium on the share price for that day. Both the offers have been rejected by the board, and we still work very closely with that major shareholder. Another shareholder I want to point out, and this is credit to the government of Ghana, and that is the Minerals Income Investment Fund. The Minerals Income Investment Fund is the sovereign wealth fund of Ghana, who manages all the royalties and free carry interest of the Ghana government. And they've elected to invest back into the mining industry in Ghana. Specifically, they've already invested $5 million in the topco level, and we're expecting further investment from that organization, which I'll touch on a little bit later. Then perhaps I won't bore the audience with the intricacies of the supply and demand dynamics. We've already heard about that, so maybe I'll relate this to something that we all know and something we see every day, and that is electric vehicles. Electric vehicles is the major driver for the lithium demand that we're experiencing at the moment. So put us in perspective, in the 5-year period from 2012 to 2017, electric vehicles production has increased from 100,000 to 1 million units on the road. So I'll say that again, in 5 years, it's increased from 100,000 to 1 million units on the road. Last year in 2023, 14 million electric vehicles were sold. And the expectations in 2030 that there'd be a 40% penetration rate. That means there'd be 40 million electric vehicles on the road. So that really just shows that in the first 5 years of development, there was a tenfold increase, and now we're looking at 40 million vehicles as early as 2030. The project is located on the southern coast of Ghana in the central region. We've established a very good working relationship with the government. Ghana is a very friendly mining jurisdiction. There's currently 16 operating mines in Ghana, 14 gold mines, a bauxite and a manganese mine. Ghana has overtaken South Africa as the largest gold producer in the African continent, so a very well-established regulator, and you know exactly what you need to do from a permitting perspective. The project has a resource of 35 million tonnes at 1.25%, of which 80% of that sits in measured and indicated. Excellent project economics, which I would like to touch on shortly, and we're on track to deliver this project as early as next year, breaking ground later this year, and full commercial production in the first half of 2026. So the project economics, on average, will produce 365,000 tonnes of concentrate per annum. That will generate a $1.3 billion NPV over a 12-year mine life, and that's for a very modest capital investment of $185 million. One of the things that's outstanding in Ewoyaa is the unit operating cost. Our all-in sustaining cost is $675 US per dry metric ton of concentrate. So what does this mean on a global scale? Once in production, we'll be the 10th largest hard rock spodumene producer globally. We'll be the 3rd largest spodumene producer in Africa. Ahead of us will be the Monono project from AVZ in the DRC, as well as Lithium's Goulamina project in Mali. So being 3rd in there is quite an achievement for us. The ore body is the gem. That's what makes the business work. So our ore body is it's a very friendly ore body. It's coarse grain spodumene predominantly. Very little other mineralization, no petalite, no lepidolite, so no other species of mineralization present. We've defined our ore body into 2 categories, coarse grained and a fine grained. And the reason we've done that is coarse grained spodumene works extremely well in a DMS, and your finer grained spodumene not so well in a DMS. So 90% of our ore body sits in that coarse size fraction, which makes our flow sheet quite simple and very amenable to DMS-only processing. I briefly touched on our operating cost, but I just wanted to highlight that in the last 2 years, lithium has been the best performing commodity and also the worst performing commodity. So one thing we have to recognize as producers, it's the producers that's at the lower end of the cost curve that will survive these cyclic environments. And that's very important for us. We tend to look for low stripping ratio, high-grade deposits near surface that enables us to maintain this low-cost profile. Bit of a busy slide, but let me summarize this for you. We'll be producing 2 products from our operation, a high-grade spodumene concentrate between 5.5 and 6%, as well as a low-grade secondary product. So initially, that secondary product will be sold as a low-grade product into the market. We do have plans to upgrade that at a later stage. And in our concentrate, at the moment, we're expecting to supply Piedmont Lithium with 50% of that, and I'll talk a little bit about their earning arrangement with us. And then 50% of that is available to market unencumbered at the moment. We're running an offtake process to put about 30% of that onto contract, which will leave us with 20% of our production available to the spot market, which will allow us to do price discovery when the time is right. Then the process plant will be developed in stages. The initial stage will be a modular DMS unit. I described this modular DMS unit a little bit like a Meccano set. It's built, constructed, tested off-site, then deassembled, put into containers, shipped to site, and re-erected within a couple of weeks, ready to be deployed and go into production within 3 months of landing on site. So our intention is to start with this modular unit whilst we are constructing the main plant. So the moment that we can break ground and we can get access to site is when we will deploy this modular DMS unit. We'll access a low stripping ratio pit first, put that material through this modular unit to generate early cash flow, and then also to test our logistical supply chains, train our people, and really make sure that everything is ready to go once the main DMS is operational. The main DMS, we'll be looking to commission that in H1 2026. That plant will have a 2.7 million tonne per annum capacity, and that's where we generate that 365,000 tonnes of concentrate. At a later stage, once the main DMS plant is at nameplate capacity, expecting this to happen late in 2026, we'll be looking to bring in a flotation plant. So as I mentioned before, that secondary product that we sell as a byproduct, as a low-grade material, we want to beneficiate that through flotation. And that's mainly because that finer grained and also the smaller size fraction material do not do well in the DMS. So we see this as an opportunity to add value and to concentrate on site as opposed to sell a low-grade product and ship waste halfway around the world. We also have a byproduct called feldspar, and now this material is used extensively in the ceramics industry. Ghana has a very vibrant and healthy ceramics industry. They consume about 1.4 million tonnes of this feldspar per annum. We'll be producing 1.2 million tonnes. So a good synergy between us and the ceramic industries in Ghana to perhaps potentially expand their operations or to get a cheap feedstock for feldspar and reduce the waste deposition that we'll have on site. At a later stage, what we want to do is also look at opportunities to enhance our ore recovery. We've already started doing some test work with ultraviolet high-intensity ore sorters, and that's mainly just to increase the grade and the quality of ore that we feed to our processing plant. Then our partners, we've got 3 main funding sources, all coming from a partnership in the project. The first one, and probably the most important for us, is Piedmont Lithium. Piedmont Lithium has the ability to farm into 50% ownership on the subsidiary level, so owning a portion of the project. They are doing this through sole funding the first $70 million in capital expenditure, after which we will share the overrun 50-50 with Piedmont Lithium. When they have completed this farming arrangement, they will also have the ability to access 50% of our offtake once that facility has been completed and drawn down. The second source of funding, and very important to us, is the Sovereign Wealth Fund of Ghana. They've already invested $5 million in Topco, and we're expecting to see another $39 million come through from them at a project level. This is very unique. You don't see this across a lot of African countries where the government have put in their own money to support a project. And then lastly, from a sourcing perspective, funding perspective, we're running an offtake process through Macquarie Bank at the moment. We've had a lot of interest. This process has been going for about 4 months now. I've already conducted 4 site visits with potential offtake partners. I've got 1 more left in April, at which time we will conclude the second stage of the offtake process. We will then review the final offers and probably take 2 of them forward to the final negotiations and only select 1 of those to partner with for the next 3 to 5 years for approximately 500,000 tons of product. If I just wrap the funding proposition up in a simple slide, so the total capex for the operation is $185 million, excluding working capital, of which Piedmont will fund the first $70 million to earn into their 50% ownership on an asset level. Then we'll see that $39 million coming in from the Sovereign Wealth Fund of Ghana to earn into 6% of the project. So that leaves us with a gap of about $76 million, of which ourselves and Piedmont Lithium needs to fund on an equal basis. We intend to fund our $38 million through this offtake process that we're running at the moment. What I want to highlight here is our MRE was, the initial maiden MRE was done in 2010 and after, 2020. And every year since then, we've had a drilling campaign between 30 and 40,000 meters, and we've consistently grown the resource by 5 to 10 million tons every year that we complete a drilling season. Currently, we're sitting at 35 million tons, so we've consistently converted about 250 tons on average per meter drilled during this resource phase. We currently have a 30,000 meter program on the go. We've completed the drilling. We're just waiting on the assays and then looking to do an MRE update again before the end of this half. We've only explored about 3% of our portfolio in Ghana. That's around 13 square kilometers. We have permitted 420 square kilometers and under application an additional 80 square kilometers, and we've only really played in 13 square kilometers of that. And where we focused around the mine site, around the immediate operations. So we haven't drilled a single RC hole outside of 2 kilometer radius from where the process plant will be situated. This has been very deliberate so that we spend the money in building a critical mass asset so that we can bring this project into production, and post that we'll look at doing more regional work on the portfolio that we hold. We also are waiting on those 30,000 meters to come in, and there's 3 circles I've highlighted there of the next targets that we want to do in the next 2024 drilling campaign. And then just to close off, important for us, a couple of milestones coming up that you need to look out for in the next year, and probably the most important one is the mining lease ratification by Parliament. And that all leads then into breaking ground later this year and seeing our modular DMS unit in operation in the first half of 2025. Thank you very much.